is the US already in recession? I'd say yes. But now comes another point that I think the analysts, Wall Street doesn't want to have bearish views. They want to be bullish all the time. This is also endorsed by the Democrats and the government and so forth. But if you look at how much money people have been able to spend because they had a increase in the asset value of the stock portfolios and in the value of their real estate holdings.
Dr. Marc Faber of the Gloom, Boom, and Doom report. How are you, my friend?
All is well. Thank you very much. We had an earthquake in Thailand, but the house where I live and my office in Chiang Mai were not impacted much. There's no damage. But the condo of my wife in Bangkok, which is in a high rise, got damaged quite a lot.
I'm sorry to hear that, but I'm glad that you're safe and okay, and that she's okay.
Yes.
Yeah. Well, we've been having some earthquakes, some financial earthquakes here really since the beginning of the year. Love to get your thoughts. Let's start with my favorite subject, gold. Gold's been ripping really since it's been ripping for a while, but it's really noticeable since the new year. What's going on with that? Are we seeing some panic buying? Is this all central bank buying? And is retail, do you think, or low, the average person, are they starting to take notice?
Well, as you may know, or as my regular readers at least know, I've been positive about gold for the last 40 years or so, since the mid-'80s when it was depressed. And at the end of 1998 and 1999, I specifically wrote about the bull market in commodities, which was also part of the subject of my book, Tomorrow's Gold, Asia's Age of Discovery, that the demand in Asia, specifically in China, for raw materials and for precious metals would go up a lot, and that also central banks would eventually buy gold as an alternative to the US dollar. And so it doesn't surprise me. What I think has happened is that obviously the price has gone up in the recent times. Over the last 1 year, we're up something like 40%. But what strikes me is that there is not a euphoria in gold or silver or platinum, because the young people prefer to speculate in cryptocurrencies rather than in gold. Gold was for them not sexy enough, not volatile enough. So they all gambled on cryptos. And in the last few months, cryptos have been weak. Number two, what strikes me is that as the price of gold went up, people took a lot of profits because it hadn't moved for a long time. So they sold gold. And I have to explain here a factor that is important. When in poor countries, say I live in Thailand, when the economy is poor, people get into debt problems because they borrow money for emergencies and so forth, and suddenly they can't repay. So they have to sell something. Are they going to sell the car and the motorcycle with which they have to bring the children to school every day, with which they have to go to work every day? No, that they will keep. Also, for face reasons, towards their neighbors who would see that they suddenly have no car. Would they sell their house? No, they have to live somewhere. But gold is something they can easily sell. So there's a lot of selling pressure by people who are in emergencies, who essentially have to repay credit or lower their credits outstanding. And so there has been a constant selling pressure in the gold market. There hasn't been any panic buying at all. Now the central banks are in a different position because compared to say 50 years ago, the central banks have very little gold reserves compared to monetary reserves. And so they are accumulating and they don't pay so much attention to the price, then to the fact that they say the board of directors of the Bank of Thailand or the board of directors of the Bank of China, they decide we're going to have 30% of our reserves in gold. And so they keep on buying until they have the 30%. Now, I'm not saying that every central bank will have 30% of their reserves in gold, but some will. And some will because of the wisdom of the American State Department that freezes the assets of foreigners that have assets at the Fed in the United States. You understand? So when you have money and reserves, you're worried that someone will suddenly freeze your assets. And so these countries like China and India and Russia and Cuba and so forth, they will keep more reserves in gold than everything in dollars. This is the reason gold is sort of moving up or creeping up. Now, I'm not saying that there won't be a correction in gold, but there has been a steady flow of money out of the gold market or from people who say gold is overbought and too high and so forth. It is relatively high compared to, say, the price of wheat or soybeans and so forth, but it's not that high compared to all the monetary assets. They go and ask your friends, go to the pub and ask your friends, have you heard about gold? And they say, most people will say, yes, gold is going up. And then they will say, well, I have some gold. Or the wife will say, usually the wife say, we have some gold. Then you ask specifically, well, how much gold do you have? And then it will tell you, well, I have a few coins. But who has 20% or 30% or 40% of his assets in gold, silver, and platinum? Hardly anyone. We have some gold. When the wives of people say that, they mean they have a gold watch or they have a few coins. But very few people, if they have, say, $20 million, would have, say, $6 million or $10 million in gold. Very few. Or
Yeah.
take a billionaire. He has $1,000 million or $100 million. How much gold does he have? Maybe 1 million in gold? Nothing. The portfolio managers, 70% have less than 1% in gold.
So that
I'm
leads,
just saying, we don't know what the value of gold is precisely. But all I can say, if I look at the investment community, and I have a lot of clients and I know a lot of people and so forth, most of them have no gold. Most of them have no gold, nothing.
so that leads me to ask then, will there be a switch with the general investment community and the portfolio managers? Will they switch to allocate more money to gold, in your opinion? And that would, if they do, if and when they do, that would further drive up the price almost exponentially. Is that your opinion?
I'm I'm not sure it will drive the price exponentially higher, but I can assure you that 95% of fund managers, especially because the fund managers nowadays are mostly young people. Nothing against young people. They have also their qualities and that they may have performed well. But I'm saying especially young people would have practically no gold exposure. Practically no,
Got
because
it.
they were all in SPACs, in meme stocks, and lately in the Magnificent Seven stocks and so forth, in NVIDIA and Tesla. They don't own companies like Newmont Mining and Barrick and so forth.
Yeah. So my next question really then is the mining stocks like Newmont and Barrick, they really come to life, or they seem to come alive into life in the past, really since January, mid to late January. Um, and the S&P, the broader market it looks like it's breaking down or it's rolling over. What's your opinion on that? Meaning, why is that? And it looks like, do you think that the mining stocks will continually to catch a bid up if we have a rollover in the broader market?
Well, this is the first bull market in gold where actually the physical has outperformed, say, gold stocks. Now, lately it's improved. Say, gold is up this year by about 10% or so year to date, and the gold stocks have rallied a bit more, the GDX, the gold mining ETF. But by and large, gold stocks in past bull markets have rallied significantly more than the metal. This hasn't happened yet. And I don't have the full explanation, but I can see why this is the case. Let's say if I have money and I have lots of money, say 100 million or a billion, what is my concern? My concern would be the financial system. Will it stay alive? I mean, we all know the way it is now, with all the deficits in the world, with all the debt accumulation, is not going to survive forever. Some sort of a crisis will occur. And then if you're wealthy, if you have 100 million or a billion, you say, so if there is a crisis in the financial systematic crisis, how do I protect some of my reserves? And you say to yourself, in the case of such a crisis, what I want to have is some physical commodity that can be easily stored and, say, hidden. So you buy gold and silver and platinum. And you buy it in physical form because the physical, yes, they can take it away from you, but it's a question of how easy is it for a government to take everything away from you if they don't know where you keep it and that you have it. I mean, you just can't go at cocktail parties and say, oh, I buried it in my garden. I have 3 tons of gold. Because
Like,
if a tax officer is there at the party, he will react to it. But this is the way essentially some wealthy people think. They're very wealthy on paper, but it's paper. And they are worried about the paper, the system. And if the system breaks, what do you want? How do you want to protect some of your wealth? You can protect it in your house, but the house is visible to government officials. They can tax it away from you.
yeah.
Property taxes, and then you know they can make it difficult to own anything. But I'd say wealthy people, they probably have 5 to 10% of the money in physical gold.
Yeah.
Eventually, they don't have it yet, but when they really think about it, they will have.
Yeah. Let me pivot a little
It's
bit.
actually funny, because in the 70s, when I started to work in 1970. The saying was, you put of a portfolio 10% in gold and gold shares. 10%. That was kind of the accepted norm. But recently, I never heard that a portfolio should be even 5% in gold. But I've
Yeah.
heard a lot about Bitcoins and, other cryptos.
Yeah. I think that's going to change. I think there will be a shift to physical.
Yes, I agree.
Yeah. So, the stock market, it looks like it's rolling over, and it looks like things are slowing down. Would you say that um, is it foreseeing a possible recession, or are we already in recession? And then it leads me to that question, the question of what is the Fed going to do? Because inflation's already high, but you have a slowing economy. What are they going to do? So there's two questions there.
Well, my view has been that about since last summer, the economy is actually in recession.
Already.
Because as you know, the government, they calculate GDP and its growth. And then they take uh, into account that consumer prices go up. The consumer prices are for goods like cars and so forth, and for services like travel expenditures, hotels, and so forth and so on. Insurance premiums that are services. And then they take the rate of growth of the GDP and adjust it for the so-called consumer price index of personal consumption expenditures. And then they come out with a figure that shows, say, 2% growth, or 3%, or 1%. But you can see right away that this figure of the GDP depends heavily on how you measure inflation. And the way they calculate inflation varies because what they call inflation is a basket of different services and goods. And you can overweight or underweight certain things. So let's say you underweight health care, you underweight education. These are services that went up very dramatically in price in the last few years. And so my view is if the cost of living increases, which I prefer to the word of inflation, increase, and the GDP increases less, then you have essentially a decline in the standards of living. And if you go around the US and Canada and you are 700 people or 1,000 people, 70% will tell you their standards of living has gone down because their cost has gone up more than the salaries, period. This is the fact. And I have very precise figures on this topic. The cost of living has gone up more than what the government is publishing. I come from Zurich in Switzerland. In every business survey about the cost of living, Zurich, Geneva, Bern are among the most expensive cities, 5 most expensive cities in the world. It's established, but the government in Switzerland says inflation is 1%. It's a complete joke.
Yeah.
And so if you ask me, is the US already in recession? I'd say yes. But now comes another point that I think the analysts, Wall Street doesn't want to have bearish views. They want to be bullish all the time. This is also endorsed by the Democrats and the government and so forth. But if you look at how much money people have been able to spend because they had a increase in the asset value of their stock portfolios and in the value of their real estate holdings. We call that a wealth effect. The assets go up. You and I say, oh, this year we are $1 million richer because we have a stock portfolio of, say, $10 million. It goes up 10%, so we're richer by $1 million. Let's go on a holiday, or let's buy a speedboat, or let's buy a new car, and so forth. But now asset prices are going down. Commercial properties is already down in the order of 40 to 60% or 70% even. But now home prices are likely to go down because the affordability is at the lowest in history. The lowest affordability, I mean, the number of people that can buy a house is the lowest in the history of the United States. So under these conditions, if prices no longer go up but down, it will have a very meaningful impact on the consumption of the people that already bought the house. And then stocks. I mean, I go out a lot to bars. Everybody knows that. And I meet all these clowns. And you ask them, what do you do? And they say, I trade. And you ask, what do you trade? Oh, cryptos. Or they trade NVIDIA or Tesla, you understand? They trade something. But I tell them, I've never met anyone in my life, and I've been in this business 50 years, who was a day trader who made money. Not one. Not one.
Yeah. Not for long term. Yeah. So if the economy's slowing down here in the US and asset prices are going down, the Fed is really in a problem, wouldn't you say? Because as they need to stimulate the economy, yet we already have the cost of living is already extremely high. You already have inflation. So what's your opinion happens next? Do the central banks continue to print, or are we going to, what's going to happen next?
In my view, the system is so broken already. No central bank can and will be willing to pursue tight monetary policies. Not one. They will all print, and they will print more, and then they have to print more and more. It will accelerate. And there's no way out. There is a way out, but the other way out is very painful. So this way, the pain can be postponed. You understand? It can be postponed to the next administration. And I mean, I think the Trump administration, maybe they had the impression that they could do something. But now they must realize that the mess is so complete. There's only one way out, is to print. And it's no other way out.
So that goes back to the original question or the original point on where we're at with the gold market and why the gold market's really been very strong, to say the least. It's it seems to me, and correct me if I'm wrong, that gold is really just sniffing out this problem with the central banks and printing that.
This is what I've been thinking about too. Uh, the gold market, say, is a sum of people who buy and sell. Now, the price of gold is moving up because I think that more and more people realize that the government, under the present political system of democracy, cannot tighten monetary policies. How do you want to cut social security? How do you want to cut defense spending? And so forth. In my view, the Western democracies will have to continue to spend money. Now, I admit they can go and say, cut certain expenditures of the budget of the United States annually. Say it's around $7 trillion. You can maybe cut 200 billion, 300 billion, but you cannot cut it meaningfully. Are you going to tell the retirees of the police force, the firemen, the train conductors, the army, and so forth, the veterans, we're going to cut your pension by 30%. Most people on the pensions, they cannot survive on what they're getting. How are they going to survive if you cut 10% or 20%? No way. No way. And then all these people, they're organized, they have unions, they're going to march and torch the entire cities.
Yeah.
There's another issue. I think it was a bad system to set it up in the first place, but now it gotten out of hand in terms of its size. I know many retirees, they have only the social security payments that they get, nothing else.
Yeah.
If that gets cut by 30% or 20%, we're in a depression.
Yeah. So again, we'll end on this then. It looks like they're not going to cut anything in your view, and they're just going to continue to print. So it's just hard to see how this plays out well.
Yes, I mean, look, this is my view. I accept that other people have other views. But I went through the figures also in Europe, and the US is maybe not even the worst country in this respect. But I can't see how in a democracy where everybody has a vote, they will vote in favor of cutting the government expenditures and cut down the subsidies that people receive and the pension contributions and so forth and so on. On the other hand, I find it difficult to see how they will vote for tax increases. They can't pay the taxes already now. They're not going to vote for meaningful tax increases. So I think it's likely that in the years to come, we'll have higher interest rates and higher inflation rates. But at the moment, as I told you, the economy is weaker than what the government is publishing. At the moment, it can be that for 6 months or 3 months, interest rates decline. Possible.
Yeah. Especially if you have a major correction in the stock market, I think that's when
Yes,
interest.
yes.
So,
Anyway,
yeah, I think we'll end on that. Dr. Marc Faber, Gloom, the editor and publisher of the Gloom, Boom, and Doom Report, Gloom, Boom, and Doom.com. I want to thank you so much of your time, and I'm really looking forward to having you on again next quarter.
yes, with pleasure. I mean, I would not tell someone, put all your money in gold today. But I would never tell any investor, put all your money in something. You understand? I'm always in favor of diversification. But I would like to say this. If there is a financial crisis, if there is a World War III, about which many people are writing about, and which is not totally unlikely, if we have these unfortunate events, it is likely that your gold holdings would do very well in monetary terms. So I would advise, and knowing that the price of gold is not very cheap at the present time, that I would still advise to keep some of your money in gold and silver and platinum. And thank you very much for the interview.
Thank you. I really do.
Bye-bye.
I'll look forward to our times. Take care.